Welcome back. I am Michael Bohr. At least that's what my mother told me. Welcome back to America's Commercial Real Estate Show. This segment is brought to you by GetValuate.com. Check it out. You can do online investment analysis and share it with colleagues. Today we're talking about the office market. My guest is Barbara Denham. She's senior economist with Reis. And Barbara, we talked about the performance of the office market. What about cap rates? What are you seeing? What's the trend?
Cap rates have not been great in the office market. I think developers, again, have been a little skittish in this expansion. So where in apartment markets you've seen steady drops in the apartment market, the cap rates in office have been around 7.2, 7.1% persistently over the last, again, 6 to 7 quarters. So investors are being very wise. You're not seeing a lot of volume either. There's been somewhat of a drop in volume of office properties. You know, certainly people are interested in some of the better properties in the gateway cities like New York and San Francisco. But overall, it's been kind of a flat performance in cap rates, 7.2%.
And how long has that flat trend been around? How long have you seen that?
Well, like I said, I think it's definitely 7 quarters. It was as low as 6.8% a year and a half ago. So third quarter 2015, it was 6.8%. That's 40 basis points lower. But you have to recall too that the Treasury rates had dropped and then increased. So when you talk about cap rates, you have to look at the spread, and the 10-year Treasury note had jumped right after the election last year, and then it stayed flat. So in some ways, the cap rate spread narrowed at the end of 2017, and then it widened a bit relative to the Treasury.
And that's a kind of a slight uptick then in cap rates. So what do you expect moving forward for office cap rates?
We actually see cap rates increasing a bit over the next year or two, only because we think the interest rates will go up. You know, the Fed has constantly been talking about increasing the Fed funds rate. Now they're talking probably in December. And if that's the case, the theory, I should give a caveat. The theory suggests that when interest rates go up, cap rates go up because the cost of capital goes up, and that factors into the price of the asset. That doesn't always work out. Sometimes people invest in commercial real estate, at lower cap rates, even when interest rates are going up, because it's considered a safer asset. So we've seen that in the apartment market, but we really think that in the office market we will see slight increases in cap rates, but the spread between cap rates and the 10-year actually will still be pretty safe in the 4% range, 4.2, 3.9% range. The next 2 years. Okay,
so you're looking at your crystal ball. I know you have it, the Commercial Real Estate Show, when we sent you. What might be the average cap rate 2 years from now? And if you want to base it on some increase in interest rates, okay, but if we're at 7.2 now, what would you think in 2 years? Because I sell office buildings, and it seems like when I talk to sellers about rising interest rates impacting cap rates down the road, like, Michael's never going to happen. We're not going to see increased cap rates. Yeah, the cost of money is not going up fast enough. Don't worry about it. I don't need to sell now.
Yeah, well, that's a good point, and it goes along with the theory. But our crystal ball does show an uptick in cap rates for office to about 7.8% looking ahead. But again, the 10-year should go up to about 3.9%. So the spread will actually be about 3.9% versus, say, 4.8% today. So I think even though you're going to see an increase in cap rates relative to the 10-year, that's not necessarily that bad.
Are you talking about a year from now? Or?
No, 2.
2 years, okay.
2019.
2 years, all right. But I'll make sure we're talking about the right crystal ball here. Right here.
Right.
Well, what tips would you have for office building owners today or occupiers of space looking at the market moving forward?
Well, if you're a tenant, I would still, I think you're in a safe shape. You can be pretty strong in your negotiations, especially if you want to move. You can probably get a pretty fair rent deal, although you have to, consider moving, which is expensive. If you're an owner, you have a good asset. You probably have steady cash flow, and the value of your asset is still strong. So I don't see a lot of upside to selling, but nor do I see much downside. It's really about, the location of your asset and how solid your tenancy is over the long run.
Right.
And I don't see the one thing I don't see is the question really becomes the Chinese and the international investors. Are they going to be staying in our commercial real estate as investors, or are they going to look elsewhere, say their own markets or Europe or things like that? So the capital pool might be a little lower going forward.
Right, and that's what you got to look at. What are the influences out there? So you talked about interest rates. Now, foreign investment. You talked in the earlier segment about the way people are using office space. What else should we look out for the future that may impact the office market?
It's a good question. I actually think that millennials are getting older, and I do think that at some point something's going to give, and they're going to say we're sick of being crammed into this open office environment. And there's actually, with so many baby boomers retiring, there's going to be a demand for more employees. So I think employers will have to be a lot more generous with the amenities they give to their staff, and one of those amenities is space. So I think the actual net absorption per added employee will go up in the next 2 years or so as the demand for labor will go up. We're not at full employment, I don't believe, but we are close to it. So at some point something's got to give, and I think this trend of very low net absorption per job growth will start to turn on the upside going forward.
Yeah, that's interesting you say that, because I just had a broker in our office that came in and said, wait, you guys have private offices for your brokers? We're all on open floor plans. We can't even hear ourselves think. And I think you're going to get more and more employees and brokers, whoever they are, they're going to suggest, hey, the employment market's better. I want better or more space, right?
Yeah, I definitely see that coming. Yep.
So the square footage per employee, you believe, is going to maybe start going the other way?
Exactly.
Yeah. Well, that's great.
Not at a glacial pace, but it'll certainly change.
Yeah, and of course it'll depend on the type of company. Well, Barbara, great information as usual. Thanks for joining us.
My pleasure. Anytime.
And if you'd like more information for Barbara, reach out to them. Their website is Reis, REIS.com. And stay with us. We'll have more on the U.S. office market. I'm Michael Bull. This is America's Commercial Real Estate Show.